Good afternoon. Thank you everyone for joining us today for our business workshop. We know this is a difficult and uncertain time for all of us. The Chamber is doing what we can to provide information and resources to our members. Our entire community has been affected by the COVID-19 pandemic, especially our small businesses that are the lifeblood of our economy. Today, we will hear from vcfos, financial experts on managing your PPP loan and understanding debt forgiveness. They'll walk through the latest guidance related to your loan, including the SBA PPP Forgiveness Application. They will also provide information on how to use the proceeds from your loan, as well as forecasting, loan forgiveness, documentation, and additional considerations. I would like to thank our sponsors for supporting the Chamber programming. Our exclusive pivotal partners are Amazon, Ascension Seton, Home Depot, PIMCO, and Wells Fargo. And thank you to our foundation partners and our corporate partners. Our business workshops are designed to provide great tips and insight, plus give the audience an opportunity to ask the panel anything. Please note this will be recorded and posted on our website. And now I would like to introduce our expert panel. Jennifer Lennarz is a consulting CFO at vcfo. She is a versatile executive with more than 25 years of accounting and finance experience in leading companies through startup, turnaround, and continuous profitable growth situations. She has provided financial and operational leadership to numerous privately held, private equity-backed, and public organizations. Jennifer has implemented processes and procedures to streamline operations and resolve regulatory compliance matters, as well as maintain compliance. She was instrumental in completing numerous capital transactions from $1 million to over $100 million in the form of venture capital, private equity, and IPO. Our next panelist is Regina Walters. Regina is a proven financial leader and analyst with demonstrated success in optimizing financial and operational capacities of various entities within the healthcare industry over the last 20 years. Her extensive expertise in the healthcare industry and understanding of higher education, medical practice, and both residential and commercial real estate allows her to offer sound financial strategy to her clients with diverse and well-informed financial solutions. At vcfo, Regina performs work plan analysis for clients, designs financial strategies, and then works to seamlessly implement an accounting finance department restructure. Our last panelist is Darrell Tesmer. Daryl is the Chief Compliance Officer and Executive Vice President at vcfo. He is a dedicated and seasoned compliance expert with experience across a wide range of industries, including software, internet, semiconductors, life sciences, biotech, nonprofits, real estate, and household products. As vcfo's Chief Compliance Officer and Executive Vice President, Daryl is constantly searching for new corporate opportunities and striving to foster stronger strategic partnerships. Daryl offers management and negotiation of company contracts and agreements, corporate financial planning and reporting, cash, investment, and treasury management, tax planning, administration, and compliance, and corporate IT and human resource related services. Thank you so much to each of our panelists for joining us today. And with that, I'm going to turn it over to Jennifer.
For joining us today. First of all, I would like to give you a little bit of background about vcfo for those of y'all that don't know who we are. We are a professional services firm providing finance, HR, and recruiting support. We've been in Austin since 1996, and our mission is to make companies stronger. So again, thank you to the Chamber for asking us to speak on this topic today. We have been very involved in the PPP program. We have been following it since its inception. And to date, we have helped approximately 45 companies generate over $20 million in loans from the program. So first off, our agenda. What are we going to discuss today? First of all, we'll go through what can you use the proceeds for? Then what you cannot use the proceeds for. We're going to go over some important dates, because when you start looking at the documentation, you'll very quickly learn that there are lots of different dates involved. Next, we'll follow up with the PPP Loan Forgiveness Application. This application was issued by the SBA just last weekend. While it has provided some more guidance, it has also generated a lot more questions. Next, we'll go over the documentation that you are required to provide to your lender, documentation that you are required to keep, and some things that we suggest that you do. Then we'll look at forecasts and strategies, some additional considerations, and lastly, we'll open the floor for questions. Again, if you have any questions during the presentation, please put them into the Q&A section of the webinar. Okay, what can you use the proceeds for? Now, first of all, this is not what related to forgiveness. This is what the regulations and the guidance allow you to use the money for. So you can use it for payroll costs. Payroll costs include gross salaries, gross wages, gross tips, gross commissions, and separation pay. You can also use it for the continuation of group healthcare benefits. You can use it for sick, medical, or family leave and insurance premiums. You can use it for payments to employee retirement plans. State taxes based on employee compensation. No, it's state taxes based on employee compensation. Interest on mortgage obligations incurred before February 15th, 2020. And you'll see as we go through that February 15th, 2020 is a date that shows up recurringly in the guidance. You can use it for rent under lease agreements, both real and personal property, for agreements that were in place before February 15th, 2020. You can use it for utilities, and we'll get into that a little bit more further on, that began before February 15th, again, that same date. And interest payments on any other debt obligations that were incurred before February 15th, 2020. Now, next, what can you not use the loan for? And this guidance does have some teeth in it to ensure that people use the proceeds for the proper purposes. So you cannot use the proceeds for independent contractors. If you have an independent contractor you're paying on a 1099, they can apply for their own PPP loan. Okay. You cannot use it for any compensation paid to an employee whose principal place of residence is outside of the United States. For determination of residence outside of the United States, you use the same guidance as you would use as is provided by the IRS. Any compensation paid to an individual in excess of an annual salary of $100,000. So that means over an 8-week period, it's $15,385. You cannot use it for federal employment taxes imposed or withheld. You can use it for state taxes, but you cannot use it for federal taxes. You cannot use it for qualified sick and family leave, which is already covered under sections of the Family First Coronavirus Response Act. And you also cannot use it for prepayments or principal payments. So as I mentioned, there are a lot of dates to deal with in this guidance. First date is your loan disbursement date, and we'll see why this is key when we get a little bit further in. This is the date that the funds were provided to you by your lender. If you had multiple disbursements, this date is the first date that the date of your first disbursement. February 15th, 2020, as I mentioned earlier, this is the in-service date for lease agreements, debt, mortgage, utilities, and you are going to have to provide documentation showing that things were in place on this date or before this date. It is also used in what is called the Fte Reduction Safe Harbor, as well as the Sour Hourly Wage Reduction Safe Harbor, and we'll get into those a little later. February 15th to June 30th, 2019. These are reference periods for FTE calculations. You will have a choice of 2 reference periods, February 15th to June 30th, 2019, or January 1st to February 29th, 2020. Next, May 1st, 2019 to September 15th. This is an alternate reference period that was added based on feedback so that seasonal employees were covered. For example, if you happen to be a business that operated in the summertime, you would have had problems under the original calculations. So some leeway was added for that. February 15th to April 26th, 2020. This is a comparative period for wage reduction calculations. January 1st to March 31st, base period for wage reduction calculation. And then June 30th, 2020, remember to keep that one in mind because that is going to be your safe harbor date for both FTEs and wages to negate any wage reduction or FTT reduction penalty. Okay, as I mentioned, this last weekend, the SBA came out with the PPP Loan Forgiveness Application. This is downloadable from the SBA's website, and at our website at VCFO, we do have a COVID-19 landing page where you can find links to the SBA, Treasury, etc. So the application has multiple components and really is sort of done in the same form as a tax form. There is instructions, there is a calculation form, and then subforms. There's Schedule A worksheet, Table 1, Table 2, FTE Reduction Safe Harbor. All of these have to be filled out and they roll up to the PPP Loan Forgiveness Calculation Form. There is also an optional borrower demographic information form. And lastly, there is a certification that you are going to have to sign to authenticate what you have used the funds for. And we will say that this does have some teeth in it. So, you really want to pay attention to the regulations. Okay, first up, the loan forgiveness calculation form. So the loan forgiveness calculation form, after you get through name and address and SBA loan number, wants to know employees at the time of application and employees at the time of forgiveness. I will note that this is not FTEs that are brought up in the rest of the forgiveness calculation form. They just want a head count regardless of whether it's full-time or part-time. Covered period, very important. Covered period, everybody hears is 8 weeks, but please remember 8 weeks is 56 days. So it does not mean it goes from a Wednesday to a Wednesday. You actually have to calculate the 56 days. It's very important. One of the things that changed with the forgiveness application form is the covered period. So they have now generated an alternate covered period. So your covered period is 56 days from the loan disbursement date. An alternate covered period can apply if your payroll is biweekly or more frequently. So basically, if you were on a biweekly or weekly basis, you can select this alternate period. You cannot select this period if you were on a semi-monthly basis. What this alternate payroll period does is it lets you delay the start of the covered period to the first day of your next pay period. This is not your next pay date. This is your next pay period. Okay, so that is a very important distinction. You have to look at actually at the covered period. Also important is this alternate payroll covered period only applies for payroll related items. All other expenses, you are still going to use that covered period, again, 56 days from your loan disbursement date. I will say too that the alternate covered period, it's still 56 days. It just shifts those 56 days. So one thing they've done is they've also added a checkbox for loans over $2 million. There's been a lot of back and forth about loans are going to be audited, the loans are not going to be audited. You know, there was a lot of big public companies that were taking money, and then people saying that that wasn't the intention of the plan. So then we went to one extreme where people are going to be audited, and you know, then it got, the feeling was, and that started inhibiting people from actually applying for the loans. So they have now come out and said, the SBA in one of their FAQs, that if you have a loan that is less than $2 million, that you are basically safe harbored from the necessity criteria, okay? If your loan is less than $2 million, there is an implied necessity. You don't have access to public markets. You don't have huge lines of credit. If your loan's over $2 million, you're gonna have to check this box, and that is when your loan very likely could get selected for audit or review. Okay, eligible payroll costs. So this is one of the areas that has changed with the forgiveness application. So there is now flexibility to include payroll costs paid and payroll costs incurred during the covered period or alternate covered period. So it's very important, I think, that they have said it, payroll costs paid and payroll costs incurred. Now, however, I will say there is another place in the documentation where they have said costs paid or incurred. So at the moment, the documentation does sort of conflict within itself. We are expecting more guidance to come out on forgiveness. In fact, we are expecting FAQs to start being generated by the SBA. So paid. Paid is incurred prior to the start of a covered period, but paid during the period. You got your loan on April 15th, your disbursement date was April 15th. You had a payroll run on April 16th. You paid your employees then, checks were distributed or ACHs originated. That is covered under paid. Incurred is day the employee's pay is earned. Incurred but not paid must be paid on or before the next regular payroll date following your covered period or your alternate covered period. Cash compensation, as I mentioned earlier, cash compensation is gross salary, gross wages, gross tips, gross commissions, paid leave, and separation incurred during the covered period. This is a line item on the application. Another line item is non-cash compensation. All of this gets scheduled out. So contributions to employee health insurance, contributions to employee retirement plans, state and local taxes on employee compensation. One thing I will mention on health insurance, if you are writing the check to your insurance provider, but your employees are paying a portion of their health insurance, you can only deduct the amount that the employer, the amount that you are paying. So from that insurance bill, you are going to have to back out the amount that is being paid by employees. Cash compensation to employees in excess of $100,000 is still the maximum. And as I said earlier, that is $15,385 over your covered period or your alternate covered period. Next, eligible non-payroll costs. And again, I do want to remind everybody, this means eligible for forgiveness. There are costs that can be included that are not eligible for forgiveness and will just become part of your loan balance. So non-eligible payroll costs must be paid or incurred during the covered period. If only incurred, then they must be paid on or before the next regular billing date. So, you know, utility bill is a prime example. You get your electric bill. You know, your electric bill might be for, you know, covered 2 weeks of the covered period and 2 weeks outside of it, but you don't get it until you're outside of your covered period. You're allowed to include that as long as it is paid on the next billing date. Okay, business mortgage interest. You cannot include any prepayment. You cannot include any payment of principal. It is just the mortgage interest payment. Business rent or lease payments for real or personal property. So copier leases, that can be included. Business utility payments, electricity, gas, water, transportation, telephone, internet access. This is one of these areas that we were hoping for a little bit more clarity. Under telephone, we do not know if that includes cell phones. We don't know what's included in internet access, paying money to Zoom for Zoom meetings. Is that included? We don't have the answers to those yet, and we highly encourage you, monitor the SBA websites, monitor the Treasury Department's website, because we expect more clearance on or more clarification on these topics as we move through the next few weeks. So to maximize loan forgiveness, your non-payroll costs cannot exceed 25% of the forgiveness amount. So 75% payroll costs, 25% non-payroll costs to maximize loan forgiveness. Okay, Schedule A. Schedule A is where we get into FTEs and actual wages. So the definition in here was not exactly the definition we were expecting of FTEs. They have defined the definition as average number of hours worked per week divided by 40, capped at 1, rounded to the nearest 10th. Okay, so this is not where you might see in healthcare or something else where an FTE is counted as someone with over 30 hours. You have to do the calculation. Under this method, if they are working, someone is working 39 hours, they're not going to count as that one FTE. They're going to count as a fraction. There is an option to use a simplified method. In this simplified method, you use 1 for employees who work 40 hours or more and 0.5 for employees that work 40 hours or less. That means if somebody under this method works 39 hours, guess what? You only count them as half an FTE. Because you're given these two options, when you're doing your calculations on forgiveness, we highly recommend that you model both of the options and determine which one is most advantageous to your business. You do have that ability. Okay. there is a reduction to forgiveness if average FTEs fall during the covered period. So basically what you're doing is FTEs are going to be compared to the reference period, and there will be a reduction based on a reduction in forgiveness based on any reduction in those comparative periods. Now, there are a couple exceptions to this reduction. One is if you make a good faith written offer to rehire an employee that you furloughed or laid off, and that employee rejected your offer. For example, they decided, well, you know, I'm getting this extra $600 from unemployment. That will not count against you, okay? Also, will not count against you is any employee that was fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in hours. Because, you know, some employees might have requested a reduction in hours because they have family members, you know, older parents, children that they need to help take care of. Okay, so there is also an FTE Safe Reduction harbor. If you qualify for this safe harbor, the reductions, you are not subject to an FTE reduction. To qualify for this is you have to meet two requirements. FTEs were reduced during the period between 12/15/2020 and 4/26/2020 and restored by June 30th to the level that they were on February 15th. So basically, you'll look at the level on February 15th, the level on June 30th. As long as they're restored, you fall into the safe harbor. There is also a reduction to forgiveness for a salary and wage reduction, okay? First of all, it excludes employees with annualized compensation greater than $100,000 for all pay periods in 2019. This is an odd distinction we feel that they're making. So you really have to look at your pay periods during 2019, and in any of those pay periods, did an employee have annualized compensation greater than $100,000, and then you can exclude them. We're hoping for some more clarity around this. It also excludes employees that were not employed at any point in 2019. And the look back period is January 1st, 2020 to March 31st, 2020. So next, amounts paid to owner employees. There's self-employed individuals or general partners. There is a specific line item for this. It's up to $15,385 or 8-week equivalent compensation, whichever is lower. Also, if you are an owner employee and you are taking wages, you cannot include in both places. You cannot double count. Okay. There's a line item for include employer paid amounts for health insurance, employer contributions to retirement plans, and again, state and local tax on employee compensation. Remember, no federal tax. So you are going to have to sign a certification for this. You are going to certify that the loan was used to pay costs that are eligible for forgiveness. So when you're doing this forgiveness application, make sure that you're only including eligible costs, okay? Also, in relation to payroll costs, it does specifically say that the payroll costs were used to retain employees. You know, gross wages is a pretty loose definition. I mean, there's nothing that says you can't exclude bonuses. However, whatever you include has to be used to retain employees. And remember, it has to be incurred or paid during the covered or the alternate covered period. Okay. All applicable reductions due to decrease in employees and wage reductions are included. Okay. So make sure that those calculations are taking place properly, that you are submitting all the required documentation and you are verifying the costs on those submitted documents. Tax forms submitted are consistent with those submitted to the IRS, state, or workforce agency. Now, this is very important. If funds are knowingly used for unauthorized purposes, the government may pursue civil or criminal fraud charges. There was somebody in East Texas that fraudulently got a loan, and criminal charges have now been filed against them by the Department of Justice, and this just came out today. Okay, so what do you need to submit with your loan forgiveness application? You need to submit, as far as payroll is concerned, all documentation verifying cash compensation and non-cash benefit payments for the covered period. Third-party payroll provider reports or bank statements, tax forms, 941s, whether they're not going to be wholly within the period, so you're most likely going to be providing forms that overlap with covered or alternate covered periods. Payment receipts or account statements documenting contributions to any employee benefit plans. In regards to FTEs, number of FTEs on payroll per month between 2/15/20 and June 30th, 20. Average number of FTEs on payroll per month between January 1st, 20 and February 29th, 20, or alternate periods for seasonal employers. Remember, these are all those comparative periods that I was talking about earlier. Okay. Time periods for FTEs, you need to make sure that your time periods are the same periods that are in Schedule A. So your documentation that you provide needs to tie to the Schedule A in regards to payroll, FTE calculations, etc. Your documentation may include payroll tax filings, state quarterly business filings, individual wage reporting, or unemployment insurance tax filings. So what do you need to submit for non-payroll? So for all those items that I talked about earlier, where you have a loan agreement, a lease agreement, etc., you need to provide documentation proving that those obligations or services existed prior to February 15th, 2020. Anything you put in place after February 15th, 2020 is not eligible for forgiveness. Lender amortization schedules and receipts or canceled checks, lender account statements, lease agreements, canceled checks, statements verifying payments. Again, this is for real or personal property. Copies of utility invoices and receipts or canceled checks. Remember, incurred or paid. Okay, you're going to need to show both. So you're going to have to keep documents after your covered period to show that you may be paid for an incurred but not paid cost that happened outside of your covered period. Okay, required to be maintained but not submitted. All documentation related to your PPP loan. We highly recommend that you set up a separate folder on your network, title it PPP loan, everything to do with the PPP loan, put it in that folder, because It might take a while for the SBA to get through these millions of loans that have gone out, and for yours to be picked or reviewed. And you don't want to be scrambling for documentation or thinking, where did I get that amount from when you were being asked the question. All documents relating to loan forgiveness application. Salary, hourly, wage reduction calculations of each individual employee. This is very important. These calculations, they are not global calculations. They have to be calculated on an individual employee basis. You need to show support that you have looked at annualized rates of more than $100,000 for employees. You need to have support for your Fte reduction safe harbor and your salary and wage safe harbor. Documentation regarding any change in job status related to employees, increases in wages, decreases in wages, employee terminations, reasons for terminations. All documentation is required to be maintained for 6 years after the loan is forgiven or is repaid in full. So if your loan is outstanding for a year, it's 6 years from the date that it's paid in full. Also, you are permitting authorized representatives of the FBA access to all files upon request. Again, don't wait until somebody becomes knocking on your door, you get that email or phone call saying, hey, we want to look at your files, to be scrambling looking for them. Okay, forecasts and strategies. So these are some of our recommendations that we think you should do as best practices and some of the things we're helping our clients with. You should forecast expenses for your 56-day covered period, and for payroll or FTEs, your alternate covered period if you're using an alternate covered period. You should also have buckets for expenses qualified for forgiveness, not qualified for forgiveness. For example, transportation costs. We don't exactly have a definition of that. Internet access, we don't have a definition of that. Think of the things that you can think of, and for now, think about them, put them into a list, not qualified forgiveness. We also recommend that these forecasts are not static. You don't just do it and leave it. Keep it as a rolling forecast. Remember, all these calculations could change as we get more guidance. In fact, we are hearing things over the past 2 days that there seems to be momentum on both sides of the aisle to make some significant changes to the PPP plan, such as extending the period from 8 weeks to 12 weeks, changing the 75%, 25% ratio. We need to be ready for these changes. And so we're not having a knee-jerk reaction for them. We've thought about them. We know how we're going to do them. Model forgiveness calculation under the different scenarios allowed. Do a model under the covered period. Do a model under the alternate covered period. Do a model doing the 2 options for the FTE calculation, the regular option or the simplified option. Like I said, be prepared for timeline changes. This act came out so quick. In some ways, it's really amazing we have as much guidance as we do. But as I keep telling people, the only thing that we have seen that's been consistent in this whole PPP program is change, okay? It changes. Treasury's constantly coming out with new guidance. SBA is constantly coming out with new guidance. Also, be prepared for a change in lenders. Okay, we do know the PPP loans are now being packaged and resold in the secondary market. So your initial lender may not be the lender that you are submitting your forgiveness application to. So be very, very aware of that. We also think it's very important that you keep an open line of communication with your lender. Don't wait till the end of your covered period to talk to them. Keep that communication going on a weekly basis. And also develop strategy for the weeks and months following the end of your 8-week period. You know, we're not going to get it to the end of this covered period and business goes back to normal. You know, business is not going to be back to normal, you know, in 2020, and it's highly likely it won't be back to normal in 2021. So think about what your strategy is going forward. And then last, just some additional considerations. We highly recommend you write a memo documenting necessity if you have not already done it. Document the memo, the reasons why you needed the loan, your working capital position, the uncertainty in the market, you know, your access to capital, your access to loans. You know, even if you're private equity and you're working with a big VC firm or big PE firm, you know, that doesn't necessarily mean the loan's unnecessary. You know, dilution can make this an economic necessity. Create a list of vendors with invoice dates and due dates. Known allowable, known unallowable. You know, think about it as you go through it. What can I include in here? What do I know I can't include here? As I mentioned, create a settlement document. We also recommend that you put your funds into their own separate bank account that is only for PPP funds. The monies go in there, the disbursements go out of there, becomes super easy to audit. Track allowable expenses and payments over the 8-week period, including a running total. You want to keep track of that 75-25% ratio. You also want to know, am I going to have a loan balance left after that I'm either going to have to accept, that I'm going to take as a loan, or that I'm going to give back? Okay. Also create reconciliations. You're going to have items that are going to have allowable and non-allowable expenses. You know, payroll reports, employer portion of tax, non-allowable. Employee contributions to healthcare plans, non-allowable. State taxes, allowable. Mortgage statements, mortgage principal, not allowed. Mortgage interest, allowed. So you're going to want to reconcile that, because you're going to want to make it easy for your lender to go through your documentation. A couple other things, as I mentioned, make sure to monitor the SBA and US Treasury publications for both interim rulings, additional guidance, and also, as I said, you can go to the vcfo website where we have a COVID-19 landing page with lots of links to the guidance out there. Work with your payroll provider. Hopefully they can do some of these reports that'll make your life a little bit easier. Work with your vendors. Know the timing of when you're going to get invoices from them. Follow SBA guidance precisely on the use of funds to avoid significant penalties. You know, also, a last piece is expenses paid with amounts forgiven are not currently eligible for tax deductions on your return. Now, we hear that this was not Congress's intention. However, it's actually in the IRS code that you can't get a double benefit. So unless Congress comes out with a new law, they are not going to be eligible for tax deductions. And finally, prioritize PPP loan forgiveness, forecasting, documentation, reconciliation with your finance, accounting, HR staff, and your legal team. This is something that crosses all aspects of your organization. So now, I think we'll move to questions and answers. So I would like to hand off to Daryl and see what questions we've had come in, Daryl.
Thank you very much. It's nice to join you all today. I thought I'd start off and maybe share an interesting, I I guess it was an article I read today from small business owners, and it was a survey that was asked of owners who've gotten the PPP loans their thoughts about it, and 3/4 of the respondents said they find the rules and regulations challenging and very difficult to understand. And I believe it was 22% who responded saying that they thought that the rules were very difficult to understand. So with the questions I see and the number of people who are following the topic, and as well as us, we see it, it's very detailed, it's very complex, and it's evolving. So we're going to start off with a few questions. We'll go for as many as we can in our time. I don't think we're going to get to all of them because there's quite a few now on the board, but we'll do our best. So questions come in, is it possible to use 100% of the PPP loan for payroll, or do we have to have 25% in non-payroll costs? The answer is you can use the entire amount of money if you'd like to for payroll costs. And just remember that when you do that, you still have a limitation where you can only use it for up to $15,385 per person over the 8-week period. I did see a little note in the instructions. It's kind of it's an insert that said, you don't have to submit all of your non-payroll cost documents and payments if you don't want to, which is also a way of saying that if you're exceeding that 25% non-payroll cost amount, that you can limit the items should you choose to as you turn in your documentation and your form.
Thanks, Daryl. Greetings, everyone. I have another question I'll address right now. It says, what is the procedure we need to follow to get the loan forgiven? I think the very first step you should do is download the loan forgiveness application on the SBA website. It's posted now, and a lot of the banks and lenders already have this application on their website as well. As Jennifer discussed earlier in the presentation, start gathering all your required documentation just immediately and calculate your loan forgiveness amount throughout the measurement period. This way you have all the documentation ready and you're not scrambling at the end of your measurement period to find the documentation. And the next step is to reach out to your lender. See what type of facilitation they are going to provide for submission of the documents. Find out if the banks are going to want paper copies or if they're actually going to create a portal that you could start uploading the loan documentation for forgiveness to the lender.
Okay, so another question we have is, would the health insurance payment we make monthly to our insurance company be considered part of the payroll 75%? So yes, payments made or costs incurred for health insurance for your employees are included in that 75% payroll amount. But remember, when you're making that payment, if you have employee contributions, you have to exclude the employee contribution portion. It's only the employer portion.
All right, so another question we have says, my question relates to expenses during the month that was granted and also during the month in which a 60-day period will end. So let me start with that first. So again, the periods that you're looking at under any scenario, alternative or based on the start of your loan, is 56 days. And there's been lots of questions about that in the past. So we just remind everybody that the loan, if you start your period off on the loan date, it's the day that the money was in your bank account, and that day counts. So again, it's 56 days. So what I would, I guess, next part of the question is, for example, are utilities for rent and payroll, are they prorated? So it's a good question, but the answer is with what Jennifer said and what the instructions are now telling us is that eligible amounts that you can include can be paid amounts, and they may be amounts that were prior to the loan being received. Very interesting. So those are payments for out of period prior expenditures. And also you can include amounts that have been incurred during the 8 weeks, but the only requirement is that you have to make those payments either by the next regular payroll, if it's payroll cost related, or if you're dealing with non-payroll costs, it's by the next regular billing date with the vendor. So interesting question, but I've kind of focused in on that. That's a pretty big change in terms of some of the questions that we had when the application came out. Now it looks like it's both. And that's how we've read it. It's how many people are reading it.
All right, thanks, Daryl. We have another question. It says, when 8 weeks are up on using the funds from the PPP loan, who initiates the process showing how the funds were used so we can find out if the loan is forgivable if used properly? The borrower actually is responsible for initiating the loan forgiveness process. So what we recommend is go ahead and start that process. As I spoke about earlier, go ahead and pull the application and then just reach out to your lender and make sure that you, as you're doing the loan forgiveness process, you follow the appropriate deadlines by your lender as well.
Okay, thank you, Regina. So I have another question here. May I pay my existing employees more because now they bear a risk of doing their jobs and still be forgiven from PPP? There is nothing that prohibits you from paying your employees more. Okay, you know, the guidance is around gross wages, not increases in those wages. You know, the only thing that the comment I would make in regards to it is there is a certification that says that what you are paying them is required to retain the employees. Also, remember that there is a maximum amount that they can be paid, and that's at $15,385.
So I see several questions here they're related to seasonal employers, and I thought I would maybe try to address two of them at once and see if we can maybe talk about that. So there's been a couple of questions. One is it's an educational institution that has teachers, and I think that the school year comes to the end and then the teachers are off for the summer. And there's another one here that has an opposite situation. Summer starting and there's, you know, high school students that they might be hiring. You know, I think in both cases, what I'd recommend to you as borrowers is to take a look at the alternative measurement period for seasonal employers. As I recall, it starts, if you look at the instructions, there's like a third level in there that starts on May 1st of 2019. It goes through September 15th of 2019, and you get to pick any 12-week period in that range to determine some look back for your FTEs and compare that to what's happening right now with your 8-week period. That might be beneficial to you. There's a question embedded with that talks about what qualifies as a seasonal employer. I've not read that guidance specifically, but I do remember that there was a definition for it. It had something to do with being in operation for a certain number of weeks during that same period. So I do think that guidance is out there, but hopefully that would give you an idea about where to look and maybe to run an alternative calculation to see if those results may be better than using the, I guess, the standard optional look back periods that the instructions have.
Daryl. There's been a few questions on the Q&A about insurance cost. There's questions on vision insurance, dental insurance, life insurance, short-term and long-term disability, and whether they are included in eligible costs. As we're reading the guidance, we are including these in eligible costs under the payroll portion, but just make sure when you are including the costs, it's the ER portion only. You're not allowed to include any of the employee costs.
Thanks, Regina. So I've been seeing a lot of questions come through regarding expenses. So a little bit of clarity regarding expenses. So remember the terminology regarding non-payroll expenses is paid or incurred. So you cannot prepay rent for the rest of the year and have that be a forgiven cost. The cost has to be incurred and it has to be paid by the next billing date for that particular expense. Also, expenses related to accountants, attorneys, advisors such as that, those are not in the allowable expense buckets.
Well, I think we have a couple of more questions. So I'm going to take one more and then we'll get to a second here, but there's been some questions about bonuses. It's come up numerous times ever since the program came to be. And so, you know, the question here is that, you know, we're understanding that we can't pay more than $100,000, but we would like to look as, you know, making some payments to staff as maybe, you know, a morale booster while they've gone through the period with us. And then, you know, the other part of the question is that I've seen that bonuses might fall, you know, into an area of risk. And so on the different conversations that I've had, again, you need to go back to the premise of what PPP represents. It's meant to be a retention tool. The funds were always meant to maintain and retain your staff. And if you know, if you're starting to make bonus payments for no other reason than perhaps it's a maximization strategy, well, that might fall, you know, on the risk side of things and could have some scrutiny. But, you know, if you have reasons for paying bonuses, either as a retention or perhaps they're part of a plan, a written plan that you've had and you've been paying them all along, then there's other reasons for that. So I would carefully look at that. I would document, you know, some of the things about why the bonuses are there. And that should be, you know, the basis of what's included and what's not. So, again, bonuses are not something that are specifically addressed, and they are not something right now that we have seen has been specifically excluded. But, and I think probably the last thing we would mention is that many businesses, you know, might consider payments, you could call them bonuses, but they may have a character of something else. So you have to look at them and understand what really is the reason for making those payments.
I think we may have a question, time for one more question. In the Q&A, there was a lot of questions about employees that earn over $100,000, you know, whether they're included or not included, and, you know, how much can be included. So if you have an employee that has cash compensation and over $100,000 annualized, the cap that you actually can be used for loan forgiveness is the $385,000. They're not excluded from the actual loan forgiveness. They're just capped at that specific dollar amount.
Okay, thank you, Regina. One other thing that I've seen is a couple questions regarding employees are excluded from calculations. So again, if you have an employee resigned that was terminated for cause or was furloughed and you made a good faith effort to bring them back and they rejected it, you do not get penalized for that. However, I highly recommend that if they turn down that offer, try to get that acknowledgement in writing. Make sure that you send them an offer letter and that you have a written response back with them declining it. Again, I don't think the intention, while it is the intention of the PPP plan is to retain employees, they're not out to penalize companies where employees left of their own fruition.
Well, with that, thank you so much, Jennifer, Regina, and Daryl, and the VCFO team for taking time today. This was such great information. I know it was helpful to all of those who joined us. Thank you to all of our chamber partners for your continued support of our programming. We recorded today's webinar and we'll post it along with the PowerPoint presentation used on the chamber's website. We will also have tips from today's session posted on our website. So thank you again to all of our panelists, VCFO, and so stay safe and let us hear more about what you're doing to help others. And we'll talk to you soon. Have a great Memorial Day weekend.